Good afternoon, ladies and gentlemen. I hope that everyone is well. Today, we're going to be doing a few transactions that affect the elements of the accounting equation by filling in the answer sheet provided. Assume where applicable that the bank has a favorable bank balance, right? And as you guys can see here, I already have my tables that has all the necessary information, right? So here we're going to talk about the number of transactions. Here it's gonna be our source document. Here we're going to talk about the account that is debited. Here we're gonna talk about the account that is credited. Here we're gonna talk about either if it's an asset, owner's equity, or liability. All right, so I think this is what we can have. Oh, but maybe I also made a mistake here. I can just perhaps also add the subs book, right? So allow me to do that. Okay, let me just do this. Right. Okay, and then I can just delete this one, right? There's no need for us to have this extra column here. Right, so like this is perfect, right? So we are given transaction number 1, right? Transaction number 1 is as follows: purchased goods on credit from Bango stores for 12,500 less 12% discount. So here we have a transaction where we purchased goods on credit from Bango stores 12,500. Okay, we purchased goods on credit, right? So what's going to be affected? If we buy goods on credit, guys, what is going to be affected is our creditors control or our payables, because those are liabilities. They are people that which we took goods from but we have not yet paid. So it's a liability. And where do liabilities increase? Liabilities increase on the credit side. So this creditors control or this payable is going to be what? Credited, right? And what's going to be debited is our trading stock. Why? Because we purchased goods on credit, and usually in this context, goods is inventory. Inventory is trading stock, and trading stock is an asset because we are going to be able to have that asset and then sell it to other people. So how we're gonna come here? We're going to say number 1, right? Gonna come here and say number 1, and then source document, you can just come here and write creditors, right? And then here you're gonna say CJ, and then what are we gonna say? Account debited is trading stock, right? Because we're buying inventory, we're buying trading stock. And what's gonna be credited is creditors control, right? And then how much are our assets increasing by? So they tell us that we bought this for 12,500 less 12% discount. So how we can go about calculating this is that we can use two ways, right? There's the required over given formula, and then there's the one of just calculating the 12% discount, right? So I'll do both so that you guys understand. What are we required to calculate? We are required to calculate 88%, right? Why? Because we are given 12,500 and that's 100%, right? So now 100% minus 12% discount gives us 88. So instead of paying 100%, right, we are looking to pay 88% because it's gonna be minusing the 12% discount. So we're gonna say, let's just say required over given times amount, which is going to be 88% over 100% because this 12,500 is 100% of what we were given, right? This is the full price, but we need to calculate 88% because there's a 12% discount. So it's gonna be 88 over 100 times 12,500. When you plug this into your calculator, let's see how much you get. 88 divided by 100 times 12,500. You're going to get a figure of 11,000, which is exactly how much you would have bought the inventory for. So you're gonna come here and write assets plus 11,000, and then our owner's equity is going to be 0 because it's not affected, and then our liabilities will be plus how much? 11,000 as well. Why? It's because we owe our creditors control this much. Another way to calculate this is to say 12,500 minus, right, minus 12,500 times 12%. And then how much is this going to give us? It's going to give us 12,500 minus, let us see, 12,500 times 12%. How much do you get? You get 1,500. And then 12,500 minus 1,500 gives us a figure of 11,000, which is exactly what we calculated here. Right? I hope that everyone is still well. So now we can move on to the next transaction. Let me just see if I'm going to be able to do it like this. Correct. Now we move on to number 2. Right? What is number 2 telling us? Let us see what is number 2 telling us. Issued check to Bango, right? Bango stores within 30 days. Within 30 days. Within 30 days to settle the amount owing, and then they say refer to transaction 1. Right, so with transaction 1, which is this, they tell us that there's going to be a 5% discount, right, if you settle within 30 days. So of course here they say that we issued a check within 30 days to settle the amount owing, therefore we qualify for the discount, right? Okay, now that we are paying, right, what's going to be affected? When you pay someone, usually money is coming out of your bank account, meaning that your account credited is going to be bank because you have less money. And your creditor's control is going to be debited because it's being reduced. You no longer owe the person that which you are paying, right? And because payer's control or creditor's control is a liability, it decreases on the credit side. On the debit side, and increases on the credit side. So we're gonna come here and write number 2, and then the source document will be EFT, right? And then it's gonna be CPJ because you are paying, right? Then what's going to be debited? Your creditor's control because it's being reduced. What's gonna be credited is going to be bank because money is coming out of your bank account. Then it's gonna be how much? It's gonna be the whole 11,000, right? And then your liabilities you decrease by how much? Also 11,000, like this, right? I hope that everyone understands, right? But now, right, I just need to confirm something. Okay, right? Fine. Now that we paid within 30 days, it means that we qualify for the 5% discount, right? We qualify for the 5% discount. So I don't think we are going to have to pay 11,000 because there's a discount that which we have to account for. So what we can do is that we can say 11,000 times 5%. It's gonna give us a figure of 550. So technically we only need to pay 11,000 minus 550. And that is gonna equal 10,450. So we can come here and write 10,450, and then come here 10,450. Why? Because they tell us that if we pay within 30 days, right? If we pay within 30 days, we are going to be able to account for a 5% discount. All right. So I hope that everyone understands. Now we can move on to the next transaction. I'm going as slowly as possible so that people are not left behind. Number 3. Okay, so number 3 can come here. MMAG, right? MMAG, a debtor owing 1,550 paid 1,100 rand on his account. So MMAC, a debtor. A debtor is a person that owes us money, right? It's a receivable. It's a debtor, a person that owes us money. Has paid us 1,100 from 1,550, right? So how are we gonna account for this? We know that our bank is going to be debited, right? Because money is coming into our bank account. So bank automatically is debited. What's going to be credited now is our debtors control. Why? Our debtors control is going to be credited because our asset is reducing, right? A person that owes us money is a asset, but when that person happens to pay us back, it then decreases, and assets decrease on the credit side, right? So this can be number 3, and then it's gonna be a receipt, right? It's gonna be a receipt, and then it's gonna be CRJ, and then the amount is going to be how much? It's gonna be bank plus 1,100, right? 1,100 because that's what they paid us, and then again for assets, because our debtors control is an asset, we're gonna say minus 1,100, and then of course here it's just gonna be filled with zeros because nothing is affecting these, nothing is affecting these, right? So with transaction number 3, our asset is plus 1,100 because it's bank debited. However, it's also minus 1,100 because it's our debtors control, which is an asset, credited, right? And I hope that you guys understand that. Number 4. Received a check from Flower Power Florists. The tenant for 12,000 for monthly rent. So again, we received a check, so someone is paying us, right? 12,000. Who? Flower Power Florist, the tenant. So a person that is renting out our place is paying us 12,000 for rent. So we are receiving income. How do we go about this? Of course, it's going to be a receipt because we are receiving a check, right? So it's going to be receipt, and it's going to be CRJ, cash receipts journal. Debited bank because our asset is increasing and our account is debited, right? And then what we're gonna credit is rent income. Why? Because our income, okay, actually I made a mistake. I was supposed to add another column here, right? I was supposed to add another column here. Yes. So it's gonna be CRJ, it's gonna be receipt, it's gonna be number 4, it's gonna be bank, right? And it's gonna be rent income. Our assets here are going to be debited by how much? 12,000 because our bank account is increasing. And then our owner's equity, right, is going to be credited by 12,000. Our owner's equity is increasing because rent income increases the amount of money we have in our bank account. Then we can move on to number 5. Number 5 is as follows. Cash sales 5,625 goods were marked up by 50% on cost price, right? So they tell us that here we have a cash sales of goods of how much? Of 5,625. So now we need to calculate how much cost of sales was. Okay, so now what's important when dealing with sales is that there are always four accounts that are affected, right? Let's first deal with the first one. It's going to be receipt, right? It's going to be receipt. And then it's going to be CRJ, cash receipts journal. Whenever we have cash sales, it means that our bank is increasing, hence our bank is debited. Then income, right, or sales rather, is going to be credited. And then we are able to then add here that it's going to be 5,625. 5,625, and then our income is also 5,625. Okay, then now we also need to move on to our cost of sales, right? Cost of sales, because this is how much we sold the inventory for, but it's not how much it costs. How much does it cost? 50%, right? 50%. So we're gonna come here and debit cost of sales, because cost of sales is an expense and expenses increase on the debit side, right? And then we're going to credit trading inventory, because trading inventory or trading stock rather is a liabilities, and liabilities decrease. Trading stock is an asset, and assets decrease on the credit side, right? So now we need to calculate exactly how much our cost price is, right? So if they tell us that cash sales is 5,625 and markup with 50%, we can just then say, to calculate cost of sales, we can say 50 over 100 times the amount, which is 5,625, and then this is going to give us an amount of how much? 50 divided by 100 times 5,625. I'm not sure if I did this correctly. Let me see. I'm not sure if I did this correctly. Wait, let me see. Wait, if our cash sales of marked by thing, what is then okay, wait, I'm a bit confused by this. sorry guys, to continue where we left off, right? What we were supposed to calculate here is like this. It's transaction number 5. Just give me time. It's gonna be number 5, right? How we were supposed to account for this would have been, we are looking for the cost price, so it's gonna be 100. It's gonna be 100 over 150. Why? Because this 5,625 is 100%, which is the cost, plus 50% markup. So for us to calculate our cost of sales or our cost price, we're going to have to say 100 over 150 times 5,625, right? And this amount is then going to give us an amount of 3,750. Why? Because 100 is the amount we are looking for, excluding markup. What are we given? We are given 150 because it's going to be this 100 plus the 50% markup times the amount, which is 5,625, will give us our cost of sales, which is 3,750, right? So we can come here and write minus 3,000, no, yes, minus 3,750 for our assets, right? Because our assets are decreasing. And then our owner's equities, we can say that we have expenses of 3,750. Why? Because cost of sales is an expense and expenses decrease our owner's equity, right? So what I recommend for students to learn is the formula of required over given times the amount. If you are able to understand this formula, it makes things easier. What are you required to calculate? What are you given? And what is the amount? All right. And then for the last transaction, before we move on to the next one, because this will just be part 1, is as follows. Purchased a delivery van from Club Motors and paid by check 59,000. Okay, so we purchased the delivery van from Club Motors and paid by check 59,000. So what are we going to do here? It's going to be number 6. Because we're making a payment, right? It's going to be EFT. And then it's going to be CPJ. What is going to be debited? We are buying a delivery van, right? And a delivery van is an asset. An asset increase on the debit side. So we're going to come here and write vehicle. And then the account that is credited is going to be bank, because we paid by check 59,000. Then we're going to have plus 59,000, which is for the vehicle, right? And then we're going to have minus 59,000, which is for bank, because money is coming out of our bank account. All right. So as you can see here, guys, this is part 1 of accounting equations, and basically us knowing which element affects what and what increases and decreases. So before I close the video, I just wanted to make you guys aware of something, right? The accounting equation is as follows. Assets equals owner's equities plus liabilities. So this side must always be equals to this side. And we can test that theory by doing this now. 11,000 equals 0 plus 11,000. So this side is equals to this side. It's balancing out. Minus 10,000 equals 0 minus 10,000. Again, it's balancing out. Plus 1,100 minus 1,100 equals 0 plus 0. Again, it's equal. It balances out. Number 4, with the rent, it's going to be assets plus 12,000 equals owner's equities of plus 12,000 plus 0, because nothing affects our liability. Likewise, with our sales, plus 5,625 equals plus 5,625 plus 0, because nothing affects our liabilities. Likewise, with cost of sales, minus 3,750 equals minus 3,750 plus 0. Again, it's balancing out. And then lastly, with our vehicle, it's going to be plus 59,000 minus 59,000 equals 0 plus 0, and then here it's 0 plus 0, because nothing is affecting our owner's equity and our liabilities. All right, and that is where I would like to end with this video for part 1, and for part 2, please note that it will also be uploaded shortly. Thank you guys for joining, and I hope that you guys enjoyed the lesson. Bye.